35 billion 10-year notes. The Dutch auction yield, 3.613. The when issued market was trading around 364. Definitely stopped through by 3 basis points-ish, which means lower yield, higher price. If you're selling securities, high price is nirvana, isn't it? The metrics are stellar. 2.66 bid to cover, best since February of last year. 79.5 on indirect. Seriously, I have a 20-year database. There's nothing close to this. That could be an all-time big in terms of indirect bidders. And if we look at the direct bidders, it's the only fly in the ointment. It's a bit under the 18% 10 auction average at 15.2, but dealers at 5.4%. I've never seen a smaller amount. So the buffet table was cleared by investors. The dealers took back hardly any. If you look at the intraday chart, we dropped very quickly to 363, 362 and change. And all I can say is that who would lend Uncle Sam their money for 10 years for this yield, 3.613? I don't see a lot of hands going up. However, if you thought rates were most likely going to be going down over the next year or so, maybe this is what you would buy to see so many auctions, this one included lately, Kelly, where the demand is so strong. We could tell investors, well, I don't think they're on the same page as the Fed. Just my opinion. Back to you.
Thank you, Rick. Dom, your reaction?
I would say this. There was a point in history when a lot of folks looked at that indirect bid. 80%, roughly thereabouts.
Number.
That's huge, but that's also a proxy for foreign central bank buying, right? And so if there is, to Rick's point, this idea that rates are headed lower, there might be large and very large, possibly sovereign institutional buyers who are finding value at current levels for 10-year yields.
Think about the Japanese, for instance. That's been a big source of the discussion. Sandy, are you in the soft landing camp here in general?